Shares of SOFI Technologies have surged 121% in the past 6 months. This rise is significant, especially compared to the 13% rise in the industry. Given the remarkable upsurge, you may wonder if the current level still offers a buying opportunity for SOFI. Well, let's find out, because SOFI Technologies just got their price target raised by Goldman Sachs. Don't worry about subscribing, tapping the like button, or looking for the coaching and Discord link. We're going to jump into SOFI after earnings right now. Before we jump into SOFI, my free masterclass webinar returns this Friday, 8 p.m. Eastern Time, 5 p.m. Pacific. You guys don't want to miss it. Link is in the information box below. Very limited spots. Every single webinar, I get hundreds of emails asking me if it's too late, and it is. We are full. You have to register now with the link in the information box below. You're going to learn more in the 1 hour you spend with me than anywhere else. That's what every student that's ever attended has told me, and it's an ongoing thing. I hope to see you guys there. Huge announcement, and I'll have a Q&A to answer your questions. The Federal Reserve's recent rate cuts have significantly boosted SOFI by alleviating pressure on its lending business. Lower interest rates, reduced borrowing costs, encouraging more customers to take loans and refinance existing ones. This improves SOFI's loan origination volumes and enhances its overall profitability. Additionally, the reduced cost of capital supports SOFI's ability to expand its lending capabilities while maintaining competitive interest rates. These rate cuts are particularly beneficial in a challenging macroeconomic environment where borrowers seek affordability, giving SOFI an edge in growing its customer base and improving its financial performance. This rate cut extended a trend of reductions through 2024, which is expected to continue into 2025. SOFI's student loan refinance business stands due to less generous loan forgiveness policies under the Trump administration. Stricter forgiveness criteria may prompt borrowers to seek refinancing options to lower repayment costs, creating opportunities for SOFI to expand its customer base. By offering competitive rates and flexible terms, SOFI is well positioned to attract borrowers seeking relief from higher repayment burdens. This shift in policy could revive demand for private refinancing, which has slowed under broader forgiveness programs. As a result, SOFI's refinance segment could experience increased growth, contributing to its overall revenue and strengthening its position in the market. Don't forget, Anthony Noto said that it's not a matter of if, it's a matter of when SOFI becomes one of the biggest banks in the United States. Overall, continuous digitalization across all industries, particularly in the financial sector, presents a significant opportunity for SOFI. As a company focusing on an online banking and offering a comprehensive suite of products and services, SOFI is well positioned to benefit from this trend. The demand for online financial platforms is expected to rise, and SOFI's technology platform, Galileo, is an integral to its banking business and is being adopted by other financial firms. This expansion positions SOFI to capture more market share from traditional banks. Conventional banking giants like JP Morgan, Bank of America, and Wells Fargo are more mature and experiencing slower growth. SOFI has very strong fundamentals. In the fourth quarter of 2024, the company achieved a 19% year-over-year increase in net sales. The highlight was a gain in profitability, with SOFI achieving a gigantic 594% year-over-year increase in net income. This profitability improvement reflects SOFI's strong operating leverage as its larger scale supports a more efficient cost structure. Scalability remains critical to its success, with management focusing on aggressive growth in key metrics. Adding 785,000 new members during the quarter, the highest in absolute terms, strengthens SOFI's ability to continue to drive cross-selling opportunities and lower customer acquisition costs, enhancing long-term profitability. All three business segments contributed to revenue growth in the fourth quarter. Lending and technology platform revenues grew respectively 18% and 6% year over year, while the financial services segment soared with an impressive 84% increase. The consensus estimate for SOFI's 2025 earnings is pegged at 28 cents, indicating a substantial growth of 86.7% from the previous year. In the past 60 days, there were 2 upward revisions in earnings estimates for 2025, with 1 downward revision. Let's not forget that SOFI beat the EPS earnings estimate this past Monday by over 700%, from 4 cents to 29 cents in 1 quarter. And they beat revenue by almost 10%. Right now is the time to get into SOFI because it is dipped down into the $15 range. And if it goes any lower, it's a time to dollar cost average and add more to your position. SOFI crushed earnings, and it was remarkable what they have done thus far. And there's plenty of room for growth going forward. In fact, the price target with some analysts by the end of 2025 is $25 to $30. Even if SOFI only hits $25, this would indicate a 70 to 80% return in less than a year. This is crazy amount of money and profits in one stock. SOFI has already delivered over 200% in the last 6 to 8 months. So this would be even more for anyone who's been holding onto the stock over the past 6 to 8 months already. We're going to take a look at a chart. I'm going to show you guys exactly where I showed you SOFI was likely to go after earnings. We're going to look at some technicals and fundamentals yet again, and exactly what I would do to get into SOFI. But if these technicals, fundamentals, and all of these things are confusing you in the news, and maybe you're lost in trading, you're new, you don't know where to begin, you're losing money, maybe you want to retire. I'm driven every single day to help students just like you achieve your financial goals. You can see on the screen all the profits my students have been making in the Discord. We printed on Walmart and we printed on Microsoft this week and a bunch of other stocks. I have students that are making $2,000 and $3,000 a day. If you would like this to be you, you guys can go to investorcorey.com. The link is in the information box below. This way you can get started booking a call with my team and I and take control of your financial future. But don't take my word for it. Let's take a listen to what my students Josh and Adam had to say.
In just a short amount of time, the program that you offer, I've learned so much, and I've changed my entire approach to investing. You know, I'm much more structured, much more safe, and I've seen consistent, profitable growth. So I started with $15,000, right? I am now at $40,000. Okay. And I'm so proud.
So I started a little over 6 weeks ago, and I'm happy to report I'm up just shy of 20% on my entire portfolio, equates to $58,000. Just the honesty in his coaching. He's available, he's there, and he has just a very, he's very focused on helping people learn and become successful traders.
So you heard my students Josh and Adam had to say. If you want this to be your success story, go to investorcorey.com, click on training, watch this video. It will answer all of the questions you may have. Then you'll be able to book a call with my team and I so I can start helping you. And I look forward to speaking with you very soon. I showed you guys in the previous SOFI video right before earnings, in a bearish scenario, SOFI would drop down to this line right here and it would bounce around, and it's right there, bouncing and resisting on that line. Earnings was right above this line, and now it's below the line as a ceiling or a resistance and no longer support. So right about where I thought it would be. I thought the price target would be about $16.24 on average. We're at $15.99. It has bounced up several times, touching the $16.20 and $30 range and coming back down. Now this dip was not really because of earnings. This was because of DeepSeek and the overall market going down, and the mere fact that people were fearful and got out of SOFI. The earnings was incredible. They beat the estimates on EPS from 4 cents to 29 cents, and they beat the revenue by 64.49 million, 9.56%, which is really good. The guidance was also good. The company is also strong. This is a very strong company. 17.35 billion market cap, and then we divide that by 377. I show you this again. 17 divided by 377 gives us a price of sales of 4.5. Anything below 10 is spectacular. Apple is around 10 or 11. The lower, the better. That tells you how good SOFI really is. This is a great stock to get into. Total revenue, trailing 12 month, almost 4 billion, 1 billion a quarter. Pre-tax, 60 million. Net income, 332 million. EBITDA, 384 million, a lot higher than the previous quarter, a lot higher. Everything is up. We look at the balance sheet and we look at 36 billion versus 34. They have total liabilities and shareholders at 36.25 billion. We look at net debt, 203 million. Now it's up to 481 million. However, their assets cover their liabilities and their debt, so they have enough to cover. We look over here at the cash flow. They have negative 1.1 1 to trailing 12 month. Now, this cash flow doesn't look as good this quarter at all. It's part of the reason why the stock it's kind of iffy and went down. DeepSeek did not help matters. It's hard to tell what would have happened if DeepSeek hadn't have come out the way it did in the news. The stock, I think, still would have went down very similar to the way it did, maybe not quite as aggressively. But when I marked it on my chart that it was going to fall to $16.29, I think that would have happened regardless. SOFI is hitting the mark in a lot of areas, but it's always missing in other areas. And right now, I am slightly concerned with cash flow. This is not a major concern right now, not yet, but it does look slightly concerning. I keep my eye on the balance sheet. But overall, SOFI, good investment. If you have the opportunity to get in around 14, that would be great. So I would go out 2 to 3 weeks and sell puts on SOFI at least 2 to 3 weeks out, maybe a month. You'll collect lots of juicy premiums, $40 to $50 or more per contract. And then if you get in at 14, your average cost is $13.50. That is good for you because this stock is ultimately, in my opinion, going to be reaching $20 to $25 by the end of the year, probably closer to 25. So that pretty much shows that you could almost double your money if you get in at $13.50. So I would start selling puts if you get assigned, hold if you don't get assigned, sell more and sell them at a slightly higher price. And then if the stock keeps consolidating, you can average out all that premium and just buy shares in case you miss out on the opportunity. Because SOFI is, in my opinion, one of the best stocks, one of the top 5 stocks of 2025. And if you guys, speaking of that, want to see my top 5 stock video for February, comment that below. Don't forget, guys, my free masterclass webinar this Friday, January 31st, 8 p.m. Eastern Time, 5 p.m. Pacific. You don't want to miss it. Huge announcement, Q&A. You will learn more in that 1 hour than you will anywhere else. Spend that hour with me so I can show you how to make money. I will see you guys at the webinar and on the next video. Take care of yourselves.